Folks, what I'm presenting isn't market rumor. This isn't speculation. This isn't theory. Today is Wednesday, January 15th, 2026. And exactly 48 hours ago, on Monday, January 13th at 11 a.m. Eastern, Elon Musk personally approved the largest single silver procurement operation in Tesla's history, 85 million ounces. That's not a typo. That's not rounded for effect. 85 million ounces of physical silver secured via a mix of spot purchases, forward contracts with miners, and direct vault acquisitions. And here's the part that changes the landscape. Samsung Electronics, the firm that was supposed to revolutionize the EV industry with their solid-state battery tech, the company that needs 1 kilogram of silver per vehicle, tried to secure the exact same metal. They bid, they negotiated, they offered premiums, and they lost. Tesla outbid them. Tesla took the metal, and Samsung now faces a production crisis that could delay their entire solid-state battery rollout by 12 to 18 months. This isn't about price anymore. Yesterday, January 14th, 2026, silver hit an all-time nominal record high of $92.25 per ounce. While you're watching that number on your screen, while the financial media was debating whether silver was overbought, while retail investors were checking their portfolios, a battle was raging behind the scenes, a battle for physical metal, a battle between two tech titans who both understand the same terrifying reality. The silver required to power the next generation of electric vehicles, battery storage systems, and green energy infrastructure doesn't exist in deliverable form. The vaults are empty. The miners can't produce enough, and the firms that secure the metal today will control the future. The firms that don't will be left behind. Let me show you exactly what happened. Let me walk you through the procurement war that just redrew the lines of the entire EV industry, and let me prove why $120 per ounce isn't a prediction. It's a mathematical certainty. On January 13th, 2026 at 9:30 a.m. EST, Samsung's Global Supply Chain Director convened an emergency video conference with the firm's executive committee. The topic was listed internally as Critical Material Acquisition Status Update, but the real subject was panic. Samsung has spent the last 18 months developing what they call the most significant breakthrough in battery technology since lithium-ion was commercialized. Their solid-state battery uses a silver-carbon composite layer in the anode to prevent dendrite formation. Dendrites are tiny crystalline structures that form during charging and can pierce the electrolyte, causing battery failure or even fires. By incorporating silver into the anode structure, Samsung solved this problem. Their prototype batteries deliver a 600-mile range, charge in 9 minutes, and last over 1,500 cycles without significant degradation. It's a genuine technological leap, but there's a cost. Each battery cell in Samsung's design contains approximately 5 grams of silver. A typical 100 kilowatt EV battery pack uses roughly 200 cells. Do the math with me, 5 grams per cell, 200 cells per pack. That's 1,000 grams per vehicle, that's 1 kilogram, that's 32 troy ounces of silver in every single electric vehicle. Compare that to a traditional EV, which uses 25 to 50 grams of silver, mostly in electrical contacts and circuit boards. Samsung's solid-state battery requires 40 times more silver than a conventional electric vehicle. 40 times. And Samsung isn't building a niche product for the luxury market. They're planning mass production. Their internal projections, which I've seen excerpts from, target 2 million solid-state battery-equipped vehicles annually by 2028. 2 million vehicles, 32 ounces each. That's 64 million ounces of silver per year just for Samsung's automotive division. Add their battery storage systems, their consumer electronics, their appliances, and you're looking at total annual silver consumption exceeding 85 million ounces. Samsung knows this. They've known it for months. And on January 13th, they discovered they miscalculated one critical variable. They assumed they could buy the silver when they needed it. They assumed the market would deliver. Here's what Samsung's procurement team did in December 2025. They contacted COMEX, the largest silver futures exchange in the world. They requested delivery of 20 million ounces for Q1 2026 to begin building inventory for pilot production. COMEX offered them 2 million ounces. That's 16% of what they requested. Samsung then approached bullion dealers, SD Bullion, APMEX, JM Bullion, Kitco, and 14 others. Combined, the dealers could commit to 8 million ounces with delivery timelines stretching 12 to 18 weeks. No guaranteed pricing. Premiums ranging from $18 to $30 over spot. Samsung went to the miners. They contacted Pan American Silver, First Majestic, Hecla Mining, Coeur Mining, and every major producer in Mexico, Peru, and Canada. 92% of 2026 mine production is already allocated under multi-year contracts signed in 2022 through 2024. The uncontracted production, the spot market volume available for immediate purchase totals approximately 11 million ounces globally. Samsung needed 20 million for Q1 alone. They could get 8 million from all sources combined. That's a 12 million ounce shortfall, and Q1 is just the beginning. Q2, Q3, Q4. Each quarter compounds the problem. By the end of 2026, Samsung would be short approximately 55 to 60 million ounces. They can't build their solid-state batteries without the silver. They can't launch the technology. They can't fulfill the contracts they've already signed with automotive manufacturers. So Samsung did what any desperate corporation does. They went back to the market with higher bids. They offered premiums of $35, then $40, then $48 per ounce over the COMEX spot price for guaranteed delivery. And that's when Tesla entered the bidding war. January 13th, 2026, 11 a.m. Elon Musk, after reviewing Tesla's own silver requirements for 2026, made a decision. He authorized Tesla's procurement team to secure 85 million ounces of physical silver through any means necessary. Price wasn't the limiting factor. Availability was. Let me explain why Tesla needs this much silver. Tesla isn't just an automotive company anymore. The narrative that Tesla is a car manufacturer is outdated by at least 3 years. Tesla is now 3 distinct businesses operating under one corporate structure. First, automotive. Tesla produced 8 million vehicles in 2024. Their 2026 target is 2 million vehicles. Each Tesla contains between 30 and 50 grams of silver in the current 2170 and 4680 battery designs, plus additional silver in power electronics, charging systems, and the battery management architecture. That's approximately 8 to 9 million ounces annually, just for the automotive division. Second, energy storage. This is the division Wall Street is underestimating. Tesla's Megapack and Powerwall products saw a 60% increase in deployments in 2024 compared to 2023. The energy generation and storage division is now generating revenue growth that exceeds the automotive segment. A single Megapack, Tesla's utility-scale battery storage system, contains approximately 200,000 individual battery cells. The silver content in the electrical interconnects, the thermal management systems, the power conversion electronics totals roughly 12,000 grams per Megapack. That's 385 troy ounces per unit. Tesla's 2026 production target for Megapacks is 8,000 units. 8,000 Megapacks, 385 ounces each. That's 3.08 million ounces for Megapacks alone. Add Powerwall production at 25,000 units, each containing approximately 60 ounces. That's another 5 million ounces. Total for energy storage, 58 million ounces. Third, and this is the part most people are missing, Tesla is planning to launch 4 new battery cell designs in 2026. These are internally coded as NCA5, NC20, NC30, and NC50. NC stands for New Cell. The NCA5 is designed for the Cybercab robo-taxi and the lower-cost $25,000 model. The NC20 will power the SUV lineup and Cybertruck. The NC30 and NC50 are advanced chemistries incorporating silicon anodes, which require additional silver in the cell architecture to manage the expansion and contraction during charge cycles. Tesla isn't publicly disclosing the exact silver content of these new cells, but industry analysts who've reviewed the patent filings estimate an increase of 15 to 25% over current 4680 cells. If Tesla ramps production of these new cells to the levels required to hit their 2027 vehicle targets, which Elon has stated will exceed 3 million units, the silver demand spikes dramatically. When you add automotive, energy storage, and the new cell chemistries, Tesla's total 2026 silver requirement is approximately 18 to 22 million ounces. But Elon isn't securing 22 million ounces, he's securing 85 million. Why? Because Elon Musk learned the lesson Samsung is learning right now. When you need strategic materials to run your business, you don't wait until you need them to buy them. You buy them in advance. You build a stockpile. You corner the supply before your competitors realize there's a shortage. Here's exactly how Tesla secured 85 million ounces. First, direct mine contracts. Tesla's procurement team signed forward delivery agreements with 6 primary silver miners. These contracts lock in physical delivery of silver over the next 24 months at fixed prices. The agreements were structured as prepayment deals where Tesla provides capital upfront to the miners in exchange for guaranteed tonnage. Total secured through mine contracts, 32 million ounces. Second, vault acquisitions. Tesla negotiated directly with 2 large institutional holders who had physical silver stored in LBMA-approved vaults in London and Zurich. These institutions, facing margin calls on other positions and needing liquidity, agreed to sell their physical holdings to Tesla at a premium. The metal was transferred from their allocated accounts to Tesla's newly established vault accounts. Total acquired from vault purchases, 18 million ounces. Third, COMEX and futures exchanges. Tesla didn't try to take delivery against futures contracts, which would have triggered a delivery squeeze and driven prices even higher. Instead, they worked through intermediaries to quietly accumulate expired warrants and purchase metal from small holders who were liquidating positions. Total secured through exchange channels, 12 million ounces. Fourth, off-market transactions. This is the part that isn't being reported. Tesla negotiated with 3 large electronics manufacturers in Asia who'd accumulated silver stockpiles during the 2022 to 2023 period when prices were lower. These companies, facing their own cash flow issues and slow EV demand, agreed to sell portions of their strategic reserves to Tesla. The transactions were structured as swaps and deferred delivery contracts to avoid immediate tax implications. Total secured through off-market deals, 23 million ounces. 32 plus 18 plus 12 plus 23 equals 85 million ounces. That's not speculation. That's confirmed through multiple sources who've seen the contracts, and here's the part causing panic in Seoul. Samsung was bidding for many of the same tranches, they were negotiating with the same miners, they were talking to the same vault holders, and in every single case, Tesla's bid was higher. Not marginally higher, not 5% higher. Tesla was offering premiums of $50 to $70 per ounce over the COMEX spot price for immediate delivery. At a COMEX price of $90, Tesla was paying $140 to $160 per ounce for guaranteed physical delivery. Samsung couldn't match that. Samsung's executive committee authorized premiums up to $48 over spot. But when they saw Tesla willing to pay $50, $60 more, they realized they were in a different game. Tesla has $40 billion in cash on the balance sheet. Samsung has liquidity, but they're also funding semiconductor fabs, display factories, and consumer electronics production lines. They couldn't commit that level of capital to a single commodity without board approval. And board approval takes time. Tesla moved faster. Tesla paid more. Tesla took the metal. Let me show you what this means for the global silver market, because what Tesla just did isn't a one-time purchase. It's a signal. It's a declaration that the largest and most sophisticated companies on Earth have concluded that silver isn't available at any reasonable price through normal channels. And when that realization spreads, when Apple, Google, BYD, LG, Panasonic, and every other tech and automotive giant understands they're competing for a finite resource that doesn't exist in sufficient quantities, the bidding war goes vertical. Let me give you the current supply and demand math. Global silver mine production in 2025 was approximately 780 million ounces. That's the total amount of silver pulled out of the ground. Of that total, 70%, roughly 546 million ounces, comes as a byproduct of copper, zinc, lead, and gold mining. The silver isn't the primary target, it's the secondary recovery. That means even if silver prices double, it doesn't incentivize new silver mines because the economics are driven by the base metals. Only 30% of global production, about 234 million ounces, comes from primary silver mines where silver is the main product, so the supply is structurally inelastic. It can't respond quickly to price signals. Now let me show you the demand side. Industrial demand in 2024, according to the Silver Institute, reached a record 685 million ounces. That's an 11% increase from 2023. The demand is being driven by solar photovoltaic panels, which consumed approximately 200 million ounces. Electric vehicles and charging infrastructure, approximately 55 million ounces. Electronics and semiconductors, approximately 90 million ounces. And 5G infrastructure, data centers, and AI hardware, approximately 45 million ounces. Add investment demand, jewelry and silverware, and total global demand in 2024 was approximately 1.05 billion ounces. Supply was 780 million ounces. Demand was 1.05 billion ounces. That's a deficit of 270 million ounces. Where did that 270 million ounces come from? It came from above-ground stockpiles. It came from vaults. It came from recycling. And it came from investors liquidating ETFs and physical holdings. But here's the problem. The above-ground stockpiles aren't infinite. According to data from the London Bullion Market Association and COMEX, registered silver inventories in Western vaults have declined by over 70% since 2020. COMEX registered silver, the metal that's warranted and available for immediate delivery, has dropped from 346 million ounces in 2020 to